Hey guys, it's Victoria here, and today I come bearing gifts. Another video on the ADR, okay? So the ADR is very, very, very important, guys, and we're going to talk about how it helps you to identify, actually kind of goes along with the levels that we talk about, the 3 pushes, 3 ADR, your 3 days in the cycle, okay, or 3 levels in the cycle. So let's get to it. All right. So the first things first, I have to put up my disclaimer here. Okay, I'm not a financial advisor. Okay, trading is risky. Okay, your past performance does not indicate any future benefits, and you want to make sure that you are trading with money that you can afford to lose. So don't go putting your rent money on here. Best thing you need to do is get a funded trading account. And I'll share with you all towards the end the company that I use. And then you can decide from there. I think it's a really excellent tool to help you to manage your risk, because that's what happens to all of us traders. We get into the game, and the first thing we do is, once we feel like we are feeling really good and we're feeling ourselves, we start to over leverage, and then boom, we blowing out our accounts. Okay, if you haven't blown out your account more than once, twice, 3 times, then I don't know what to say. But a trader is someone who has blown out their accounts, who has gotten the mental, it takes a toll on your mental, guys. I'm serious. It just really consumes you. But hey, you have to get out of it, right? So don't go crazy, don't over leverage, manage your risk. Okay, so all right, let's get to it. So we're talking about the ADR, your average daily range. So what does this mean? Pulled this right from Google. The average daily range is an indicator that shows the average pip range of a currency pair over a specific period of time. Market makers are not allowed to destroy the economy. So each and every metal or indice or currency pair or crypto pair that you trade has an allotted pip to it, right? They can only do so much in the day, okay? So you'll normally see 6,000 to 1,000 pips or so on a currency pair for that week, something like that. All right. To calculate this, and thank God for the indicator, because I am not going to be calculating any ADR whatsoever. But if you really want to do this, you can calculate it yourself. You get the high and low of every trading day for the specified period of time. And what that specified period of time is, I don't know. I would assume it's probably 3 days. Add the distance between each daily high and low, and then divide that by the number of periods, okay? But like I said, thank God we have indicators that do that for us. So before we get to it, I do want to go over the market maker cycle, okay? So it looks something like this, right? We have your W, B, V, and then we have your M, and then we're back into the range. Then we expect it to go like this, right? And didn't do that, right? And then it starts over again. Then you have your consolidation. Then you have your V, V, M. Okay, it could do that, or it could do this. Get back to my cursor here. Do this, right? And then it goes into and it goes down again, right? It can do that, okay? And this right here is where it does the reset, and it continues down instead of giving us, the MMW and then back into the range VVM, okay? This is your typical cycle, okay? This happens in 3 days, 3 pushes or levels, then 3 pushes, 3 ADR. So we're going to talk about all of this today. We're going to look at the pound dollar, okay? And the pound dollar this week, I'm looking, this week it did, instead of going down, it reset, right? So instead of doing this number and going down, it did this number, and now it's going to go, it's kind of ugly. So let me just erase this, okay? I erased everything. That's okay. We'll start again. So we have the M. Oh, it's not where I was headed with that. Obviously, I need practice. Okay, this is what GU is looking like. So let me change the color. So this, guys, this is level 3. This is our peak formation low. Okay. Okay, so this is 3, 1, 2, and then 3 again. Okay, this is your peak formation high. So this is a representative of your H1 chart, guys. So everything's going to be based off H1 and M15. M15 is important because along these pushes, right? These pushes here, okay, you're going to also need, price is also going to need to do this too. Okay. This is how the ADR is complete. Okay. This is your M15. So when you're looking at the intraday cycle, and you're getting ready to, and this is Asia, okay, you're getting ready to go long or short or whatnot, we always want to go with the trend. I mean, we'll get better pips, smoother rides when we're going with the trend. Obviously, once you get to, say, the level 3 here, right, and level 2, you can actually counter, right? Meaning that if it is a bull cycle, like this is considered a bull cycle, okay? It's WVVM, and I just showed you right here. This is what you would see on a 1-hour chart, a multi-session W. You will see a multi-session M. So what does that mean? It means it's going to take 2 days, right? One leg will build yesterday, and then you'll see the new leg building today. And then even sometimes there'll be a small leg in there somewhere that you'll see another W pattern in there. So that's like 3 W's in one, in 2 sessions or whatnot. And the sessions, Asia, New York, Asia, London, then New York, something like that. Okay. So that is your bona fide bull cycle. Now, I obviously probably should have made that in blue, right, instead of red. So don't get confused. So let me just use purple for this one. All right. So again, we did say this is level 3. So, the other thing, let me just talk about the EMAs. In level 3, you're going to see 5,200, 5,800 cross. Sometimes you see the 200 and 800 EMA cross. And then the EMAs could be fanned out. They could be doing something like this. And that's how you also know that you are in level 3. Okay. And then for level 1, get back to my drawing tool. Level 1, some people measure their levels with consolidations. You can do it that way, or you can measure it with the pushes, right? I like to measure with the pushes, and I'll show you what that looks like. So level 1 is your 13, sorry. This looks kind of ugly. Let's try this again. 13 and 50 cross. And then you have for level 2, your 50 and 200 cross for level 2. And again, level 2 and level 3, you know, again, like I said, level 3 here, you got your 5800, your 200, your 200 or 800 cross. Okay. So same thing happens here, right? Same thing happens here, guys. Right. So I did not do a very good job to draw this because I was jumping ahead of myself here with the what GU is going to look like. Okay. It's okay. So let me put this back. Let's undo that real quick. Let me just erase this part if I can. There we go. All right, so let's get back to our beautiful, I'm going to talk to you now about the bear cycle. Okay. So the bear, and let's go back to the yellow here. So we have the M, we have your A, W, and then back into the range. Okay. Remember, now we're back to another peak formation low. Now this can happen. This can happen on an EMA, your 200 EMA. I think sometimes you might see it on 800 EMA too. Okay, but just want you to know this is the bear cycle. The bear cycle is M, A, W. All right, so the same thing is going to happen. You're going to have your EMA here again, your 13 and your 50 cross for level 1. Level 2, these are your areas of consolidation, or some people may call it where the price is pulling back. Okay, here's your 5200 cross for level 2. Okay, and then of course we have level 3. We already said this is your 5800 or your 200 800 EMA cross, or your EMAs are fanned out. Okay, and you know you're in level 3. Level 3, level 2, you can counter. Level 1, typically you don't want to counter level 1. You're probably not going to get lucky on that. Okay, sometimes you do, just sometimes you don't. But again, if you're in a bear cycle, your best bet is to look for any reason to go short, right? Until you get to level 2 and level 3, because at that point you could counter it, you could. But again, the cleaner ones are taking your, here you would be taking your second leg M's, and then here you'd be taking your second leg W's, right? That is where you want to take your entry. Go down, go up. That is the clearest thing. You're going to see this W and you're going to take that trade. Okay. Take that trade, take that trade. Okay. Up here, your M's, take that trade, take that trade. That's what you're looking for. Obviously, take that trade too up there. Okay, so I hope that makes sense, right? Within each of these levels, guys. So, okay, we did talk about the 3 days. This could happen in 3 days. It totally could. Sometimes it takes 5 days. Sometimes it could be longer, right? For this entire cycle to complete. It can take 3 to 5 days, and I've seen it even go on for 10 days, for 2 whole weeks. Okay, so I'm going to show you why I don't draw lines from 1999. Okay, trying to figure out where support and resistance are. You don't really have to, when you understand that the market maker cycle is a cycle that consists of 3 days, or it could be 3 levels, right? Because we talked about level 1. Okay, we talked about we're going to starting here at the bottom. So this is 3, and then it starts here. And you cycle 1, 2, 3. Okay, and here we go. Cycle 1, 2, and then 3. Okay, that's it, right? They do this over and over. You will see this pattern on every time frame. every single one. Okay, you can't miss it, right? You can, I like to call them pushes. Some people just don't even call them pushes, just call them levels, because these levels, or excuse me, or these pushes could be these consolidation areas of where price is pulling back. Okay, so this 3 ADR, when you measure, when I show you how you can use the indicator to measure the 3 ADR, you're going to know when this cycle is going to be up, which is pretty cool. You can use 3 ADR to help guide you on your take profit levels as well. And it also is going to alert you whenever you have a reset. Okay, I'll show you what that looks like as well. All right, because it's not going to give you 3. It's probably going to give you 1.5 ADR, maybe 1 ADR. And then you're going to see price immediately, you know, like in GU, it did the thing right here, but then it immediately, it didn't give us 3 ADR, right? It reset and then it started to go back up. Okay. All right. So let's go to the chart. Let's go to the chart so you can see what I'm talking about. All right. So now we're looking at the pound dollar, guys. I have it on here. The market's about to open. The market's about to open. Yep, the markets are about to open. So I went ahead and highlighted the psychological support and resistance. I have this indicator on here that tells me what that is. Okay. And it's going to start a new one today. So this is going to change, right? But I'm keeping this on here because this is important. Okay, it's important to know where your psychological support and resistance are, because these are your zones that you're going to be wanting to pay attention to, that people call support and resistance. And what it actually is Asia high and low. So today is Sunday, your market's open, okay? And it sets the high and low for the week. Asia sets it, okay? So that's what this is. That's why it's important to do this. And you can see I have the days of the week here. You can see that this is Monday to Monday, okay? I don't really have to go too far back. Now, I do like to back test, of course, when I'm looking at these indicators and look at what price has done. But for the most part, what happened just 2 weeks ago, like a week ago? This is like 2 weeks worth of data. And that's why this psychological support and resistance is on here for 2 weeks, okay? Now, for ADR, how do we measure that? Now, remember I told you I have this handy dandy tool. This indicator here, one is telling me the ADR is 88. Okay, it's telling me 88 right now. And usually GU is around that way, around 80 to 90. Sometimes I see 96, right? So what I'm gonna do, because the markets are just opening, the indicator right now has printed, you see up here where it says ADR high and then the ADR low right there, it's printed that already on the chart. So I'm gonna go and just measure that and see what that gives me. So you saw me come here to my insert, and I went to shape and I selected a triangle. And so let's do that again. I mean, rectangle. Do what I do, just follow what I do, not what I say, okay? There we go. Now we got the rectangle. So what I'm gonna do, I'm gonna draw. Make this a little dark so you guys can see this, okay? You see that's 93. We're gonna go right there, 88, okay? That's what this thing says about 88. So I'm gonna keep that in mind, but then I'm gonna see what this says. 150, yeah, that's too much right now. It's not ready yet. So we'll go with the 88 for the ADR, okay? So I'm gonna come here and I'm gonna put this down here, because I remember the last time I measured this, it was a little bit more, it was around 90 something, but we'll do this anyway. So what I'm doing now to copy and paste this is, when you double click on it and highlight it, you're gonna hold down your control button and then click on it, okay? Now I'm gonna do 4, because sometimes price gives us darn near 4 ADR instead of just your 3. And I'm going to come here and I'm going to do that here too. Okay, I'm doing it up here because this is the peak formation high. It's always peak to peak. Now, these indicators that you see on my chart, guys, these are available for purchase. Okay, MT4 only. I'm going to draw my other one here. Okay. Doesn't have to be super perfect, but this is good enough for me. Okay. This is where everything reset. Okay, so you see how this did not even give us 3, it gave us like 1.5. So I'm going to go ahead and throw 3 of them here. Do the 4th one for good measure. Okay. All right. So let's get to it. All right. So we can see here, this is level 3, guys. All right. See this beautiful second leg W right here. This confirmed, right, that this is now a new peak. This completed the previous level or the previous cycle. This is really what it's completing. And then from there, you're going to have consolidation, right? And this thing consolidated for like 3 days. All right. 3 days. Now, everybody counts their levels a little different. I'm not going to be picky about how you do it or say you have to do it a certain way. I just think once you see it yourself and start counting the levels for yourself, then it'll make sense, right? There's like, I usually like to count when I see the push, right? So because this is a hot mess right here, it's like consolidating. I can't see anything up until here. Like I'm counting this as a level, or I'll push 1. Okay, and then it consolidated. And then we had another push right here. These pushes don't have to be dramatic, right? And then we had this other push here. Oops. This is the 3rd push, which took us right to level 3. Okay. I think your biggest consolidation areas are going to be, look, are these 2 areas here. Okay. Level 1 consolidation and then level 3 consolidation, I think, are your biggest levels of consolidation. Now, depending on the pair, you will see that sometimes in level 2, it might consolidate for 2 or 3 days as well. That can happen. Okay, totally. It can happen there too. So this is how I saw it. That was my first push, my second push, and then my 3rd push right into consolidation. And now we know we are in level 3 because now look, you can see that it's building a multi-session M up here. And if you make it smaller so you can see that's like a beautiful M. So you're in level 3. You can go long, you can go short. So you could have taken this trade right here. Okay. And then you could have gotten confirmation, obviously. This to me is confirmation enough. If I was watching this, I would have just taken that trade up there. And that's like 50, 52 pips, right? You take it right to the 50 EMA. You don't need to hold this thing anymore. Always take it right to the EMAs, okay? See, then it pulls back, right? And then you have another little, it almost looks like, if you look at the TDI, it almost looks like, I mean, it's not an MM, but you know, it almost looks like it's like this. I don't know what you want to call that right here, but this is literally now coming into what we were expecting was for the MAAW, right? We're expecting for this to give us the bear, right? So I'm not counting this, guys, as level 1 push, because this technically is completing the previous cycle, because this is level 3 up here. It's what I'm thinking. This is level 3, right? So this right here, when prices did push here, I'll make that a little bit clear. See the 13 and 50 cross? Now we're officially right here. This is level 1 of the new cycle. Then it pulled back. This is your consolidation of level 1. Okay, there's no countering this thing right here. We're going to wait for prices to bounce off the EMA, because you can see 13 is acting like support and, or excuse me, resistance. And then we take this, right? We take this, and that is a railroad track, guys. So if you were to see that, you take this right to the EMA. And that's where you'll stop your trade. Why would we stop at the EMA? Because take a look at this, right? Let's take a step back. Why do we want to stop at the EMA? Like we said, we always use the EMAs for take profit areas. Okay. You always use them for take profit areas. All right. So when we take a look back, guys, you'll see that this is your psychological support and resistance. This is your 200 EMA, right? At this point, we don't know what price is going to do, right? Because this is a good area. This is going to let us know if it breaks this psychological support and resistance, right? Because it's already been here. It was resistance, right? And then it was support. And then here we came resistance, support. I mean, I would wait for this to come hit this EMA like it did. Gave us support there, and that's another indication that this thing is bouncing off. Like, I will count this as the first push, or the test, if you will, right? And here's the second test, and then the third, boom, it bounced off of that 200 EMA, and it continued to go on up. So this is, again, this is a railroad, guys. So this is a reversal candlestick pattern, make that bigger for you all. And here's another thing that you might not have noticed, but when you take a step back, you can see this is an inverted head and shoulders pattern. Okay, shoulder, head, shoulder. This is an inverted head and shoulders, right? So this is another indication that the reset is happening. It hit the 200 EMA 3 times, it went up. And what do we know when price hits a certain area 3 times? That third time or fourth time, it's gonna go, right? It's gonna go up. Because if it can't break it after that time, it's continuing that way, right? If it would have broke that thing there, then we would have known that this was a continuation onto the downside, but it didn't do that. It reset, and now we're going to continue on to the upside. Okay. Now we talked about the ADRs, right? 3 ADRs completes our cycle. And look what happened here, right? We didn't get the 3 ADR. We didn't get it, right? We got 1.5, right? That's all we got. If we were looking at the 15-minute time frame, so I'm going to jump down to the 15-minute. Okay. Now I want you guys to take note. If you do have these indicators, I have made a discovery, like, or shall I say, it was like an aha moment with this indicator. Because if you notice here, I call this a star, like the peak formation star. When it gives me this triangle, then this happened Thursday. I want you to take note. This happened Thursday, guys, right? So let's jump over to H1. Now, I also want you to pay attention to this. The peak formation star here, letting us know that we're going into a bear market, happened Tuesday. Now, this one is a bona fide peak formation high, and this one isn't. This is like the intraday one, right? But it also gave me a heads up. So watch this. This was Tuesday. Look at the 30-minute. Tuesday, it's there, right? 30-minute time frame, you don't see that green star. You only see these arrows, right? You only see the beast mode there. Let's go to H1. Tell me what you see. Same thing. You see here is bona fide confirmation. And here you don't see it, just like we did here, right? This is the true cycle right here. This is right here, to me, what I made of this was, okay, this is letting me know that this is resetting. This is another clue that this is resetting. And because it showed up on the 15-minute chart the day before the market decided to continue on up, this was more so a heads up, right? this was a heads up for me. Like if you wanted to, like you could have totally taken this trade short out of London. These little boxes here are called the shadow boxes, right? You could have taken this short on that previous day if you were in the market, okay, on Thursday. If you're watching, you see how this is the Asia session here, okay? You could have taken this short right here. Like this would have probably been my entry, because here the 5 and 13 cross, you could have also taken it here as well if you wanted to. Okay. And then I would have taken my, go back to that. Sorry, we're back at Thursday. This would have been the entry here. And my exit would have been, you see the blue line, this is the 800 EMA, that would have been my exit. Okay, it's 42 pips, it's not bad. Okay, that's out of London, all right? So the cool thing is, remember we're in level 3, so it immediately printed, one, it printed this star, right? The candlestick pattern right here. This is another indication right here that we're going up. So if you were to take this trade, got out here, you would have then waited to see if there was another opportunity, right? You just wait to see. And there was, it gave us an opportunity. It was a bit rocky, but it worked, right? You could have totally taken this thing from here. Always wanted to wait. Would have taken it from here and you would have taken this up to the 50 EMA. It's another 30 some odd pips right there. Now we're in New York is opening right here. And then for those of you who came into New York session, again, it's kind of ugly. But if you wanted to take that trade, I guess you could. But for me, I would have waited. Okay. I would have totally waited because it's just not enough, right? It's just not enough. Right. So I would have waited for this thing to, because we're on, number one, we're here at the 800 EMA. I would have wanted to see some kind of pattern off of the EMA. And this was a nice W off the EMA, right? So sometimes you got to go back and take a back and look and say, okay, it's giving me a nice W. So this would have probably been my entry right here. Okay. It's another 30 pips. I would have taken it right to this line. This dotted line right here, guys. This is yesterday's high. So I would have taken it to right there and closed it. Okay. So this is also another thing I want to mention is because this is here, right? I would have used this. If this wasn't here or visible, then you could also do your stop hunts, right? The stop hunt is always 25 to 50 pips, right? From Asia. It's always that way, right? This is the support and resistance, right? The psychological support and resistance area. Just remember that, okay? So you could have measured that on there and say, okay, I'm gonna take a measure. Okay, if it's going to be beyond 25 or 50 pips, I'm going to wait for the markets to finish taking out the stop hunts, because what price is going to do is going to try and make you think that it's going to continue to go short when it's really not. It's just stop hunting, right? So for the retail traders who are not paying attention, they're probably going to continue going short when it's really not. Okay, again, it's level 3. Anything can happen in level 3, guys. So you want to pay attention to the stop hunt, right? You want to wait for them to finish. And so I like it when I see the EMA, because the EMA will give me my stop hunt. And then you can see right here, guys, this is beautiful. See this W right here. I believe that's why we got this on the IDC, because here this W printed. So the first leg was London, and then the second leg was out of New York going into Asia for the next day. So this was a big heads up, okay? This is a big heads up that this particular cycle or this pair is going to reset. It's not going to continue down, it's going to reset and continue up. So now let's look at Friday, okay? Let's look at Friday. I'm going to take this off here. this was just a level of consolidation. I want y'all guys to notice one thing. Okay, so this is Asia again, right? This is the Asia range. This is what they consider the 0%, right? And here is the 50. This is half of Asia range. So what happened here was this is another way you can tell. If you don't have this indicator here and you don't see this W printing, this, you know what I mean? If you don't see this and then you come into Asia the next day, you're going to see the Asia range acting as support and then resistance, right? It's going to test, retest, and then break. And that is the other clue that this thing is going the other way, right? So that was it, guys. I hope that was helpful. Okay, I think I've talked about everything that I wanted to talk about today. We did talk about the market maker cycle. Okay, it completes after 3 ADR. Sometimes it can go a little bit longer than 3, like it did here. Okay, I'm going to draw this line right there so you can see that, and you guys can do the very same thing. You can use these areas or these levels as targets. Okay, you can use them as TP areas, right? And then if you think like, oh man, this thing, what's happening? You know, don't fret, right? Because you know that it hasn't completed it, right? So you just wait to see what they're gonna do, right? So since they gave us a beautiful push off of the 200 EMA, we still had some more ADR to go. Okay, and you see what I mean, guys? Monday to Monday. You don't need to go drawing a bunch of lines from 1999, 1902, trying to figure out where your support and resistance are. And your support and resistance is right in front of you in the last 2 weeks in your psychological SNR. Okay, again, this is your psychological support and resistance. This is a representative of the Asia high and the Asia low for the week, right? That's what this indicator does for us. Absolutely love it. Okay, and these areas, when price starts to come around these areas, I'm paying attention to what's going to happen next, because like I said here, you see, we didn't not even get 3 ADRs when this new peak was established, right? We were in level 3 for 3 days. Okay, and then once price started to get out of there, right, I'm seeing only 2 pushes, and I'm only seeing 1.5 ADR, and I'm seeing how price bounced right off of the 200 EMA. Okay, and I'm seeing what we talk about all the time, the touches, right? The 1, 2, 3, and it's up there, right? So now I believe we already have completed 1 ADR. Okay, I believe so, right? I believe this highlighted for us on, and there's another thing, when your ADR completes, right, this indicator, it's going to turn red or whatever color that you designated, but the default color is red to let you know that that ADR has completed. Okay, and then now it's going on to the next the other 2 to finish out the cycle. So I hope this was helpful. Okay, let me know if you have any questions, and we'll see you on the next video. Thanks, guys. So this week, look to go long on the pound dollar. See you guys later.